let's just sort of assume that Trump does sign the bill. I think the shutdown is just not going to happen. It's humongous political risk, really, for very little payoff to him. He's going to hem and haw, but I think he'll sign it. So I think that's really off the table. Market is really factored in. So the China story is pretty positive. I think President Xi, there's a tremendous amount of pressure, I think, on the Chinese right now to do some kind of a deal. Clearly, Asia has fallen off the cliff as far as economic data goes. One of the things that we're all watching, South Korea, which is the canary in the coal mine. South Korean economy tends to be a very good leading indicator of what's happening in Asia, and they've had some very, very poor results recently. As a matter of fact, overnight, their unemployment rate spiked to a 9-year high. So I think the pressure now on China to negotiate and make a deal is very strong. That should be a mildly positive move for the markets at this point.
Mildly positive?
Yeah, because I think so much of it is already factored in some ways. We've had a huge rally already, and then I wouldn't be surprised that once we sign a deal, the markets kind of just have a knee-jerk reaction and then go, because the much bigger story is organic demand. The much bigger story is underlying growth. And I think the most interesting single economic factor to look at is actually something called World PMI or World ISM measures. That is the measures of manufacturing and service activities globally, the aggregate number, because that number has been falling very rapidly over the last couple of months. If it can stabilize and then obviously start to push itself back up, that should be really positive for stocks. But if we start to just see very little appreciation or very little improvement in those numbers, I think it's very hard to imagine stocks going up much from here.
If you're right, and if that's priced in, what if we don't get a deal? Then what?
Yes, so that's very negative. I mean, I think if we don't get a deal, I think it's going to be a huge amount of risk on. You're going to see
how negative?
We could easily return to testing the lows in December. No problem. I mean, if you look at
you think we could fall 15%?
Yes, absolutely. Because the markets at this point, the big rally in the markets right now, I think it's pretty obvious, has been as a result of easy money. The Fed is basically just taking its foot off the pedal. If we have a very negative shock to the system where there's no trade deal, and now you see Asia really starting to decelerate, and that eventually is going to make its way over to us. Already earnings growth numbers have really come down from double digits to single digits. It's going to be very difficult to see what monetary policy makers do unless they just literally go back to cutting rates, and keep pumping it up. So I think the market at this point is really anticipating that some sort of a deal is going to be done, and so a negative scenario could be a big shock to the system.
Let me give you a third scenario, though. Are you ready, Boris? I know it's 5:11 in the morning. Let's say we get no deal. They just can't get a trade deal done. Doesn't happen,
right.
Okay? To your point, very negative. But the Fed takes notice. Could a no trade deal scenario make the Fed even more dovish to the point where we possibly get rate cuts this year? Is there always sort of that Fed backstop sitting there?
Right. It's unimaginable, and certainly that's not a situation where the Fed wants to be. The Fed really wanted to be in the exact opposite situation. They wanted to raise rates high enough so that when they do need to take them down, it would be a much greater material impact on the markets. So it's not unimaginable because the Fed is obviously very sensitive to what's going on. As a matter of fact, overnight they talked about the idea they were supposed to just completely truncate the whole balance sheet. They were going to keep all the roll-off coming on, and now they're even reconsidering that. So the Fed, I think, is super sensitive, trying to keep monetary policy as easy as possible. Basically, it sees lots of dangers across the world and is trying not to add salt to the wound at this point. So yes, the Fed, I think, is going to remain very much in an easing mode until it sees actual clear signs of economic resurgence back across the world.